Gold versus Bitcoin in 2025. Welcome back to Mangosteen and Finance Bro University. Let's dive into whether gold or Bitcoin is the asset to own moving forward. Finance Bro University, the new paradigm in finance. Master the old rules and then break them. So our discussion is going to go through a bit of an agenda of current price movements and market cap of Bitcoin versus gold. We're going to talk about the sovereignty issue. Are these price assets able to move sovereignly? Do they concern themselves with the actions of other nations or other sovereigns? Price action year to date, is that even important? Bitcoin's cycle and gold's fair value, and we're going to have a look at a bit of some stuff long term. So here we can see that gold has added multiple Bitcoin market caps recently. These are the market caps of gold versus the market cap of Bitcoin, and you can see that Bitcoin is still a baby, and in the last 18 months or so, we have added multiple Bitcoin market caps to the price of gold. And that just shows you the power of gold as a much, much more established asset compared to Bitcoin. So Bitcoin's got a long way to go before it's going to hit that maturity of gold, despite its impressive price movements to date. What's been driving this massive increase in the market cap of gold? Well, we can see that China and other central banks have been buying. So here's Chinese gold activity, and it's exploded since the middle of 2024. And we have seen gold reserves at the POBC, which is the People's Bank of China, rise steadily through 2023, 2024 into the beginning of 2025, and that trend will be continuing, and we can see that in the price of gold. And so central banks, a lot less trust amongst nations, less desire for nations to hold what they would typically hold, which is treasury reserves of other currencies, because these currencies are being debased. That's where this debasement trade is coming. And this is where this lack of interest in owning foreign reserves exists. And so gold is filling that gap in that mainstream thinking, and so it is having an amazing time as a result. And we can see here that gold remains sovereign while Bitcoin's still a bit of a baby. Now, this is the recent price action. This is October, and we can see in October, Trump made his little tweet about China having 100% tariffs, and then someone long squeezed Bitcoin, and we went down into some pretty bearish sentiment, and we've come and sort of relaxed here recently, while gold really didn't give a shit at all. And that is the difference between a sovereign asset and a more nascent asset that is trying to develop and become mature, right? Gold doesn't give a shit what any sovereign does. It reacts or absorbs the decisions that these sovereigns makes. Bitcoin's still got a little way to go, still a nascent asset, still hasn't matured beyond concerning itself with the tweets of a president. But, it will get there eventually. So price action year to date. So here is a comparison of gold's price in the bars and Bitcoin's price in the orange. And we can see that year to date, gold has smashed Bitcoin, and everyone has been quoting this across the internet and across X, and everyone's like, oh, gold's amazing and Bitcoin's getting smashed. But year to date kind of seems a bit arbitrary, and I want to explore an alternative with you now. Bear with me for a second. We've got this chart of Bitcoin's price versus gold's price year to date, and we can see that Bitcoin's had a hard time keeping up with gold. But what I've presented at the bottom here is the delta in the 2 and 10-year interest rate. So this is the 2 and 10-year interest rate. It's currently about 0.5% higher on the 10-year interest rate than the 2-year. And this is a really interesting metric because when there's a lot of fear in the market and there's a lot of recessionary pressure, it will go negative. And it did very recently. It went negative here in mid-2024. It actually went negative in 2022 here on the back of severe hikes in interest rates by central banks. You can see here things got really negative, and then Bitcoin had a hard time, and then we crossed positive again, and Bitcoin's gone up and has outpaced gold. And if we just take that as the benchmark of when we think things would return and when hard assets would do well, here we can see that Bitcoin's outperformed gold since the interest rate delta has turned positive once again. And so that to me feels a little bit less arbitrary, and Bitcoin is still a much stronger performer than gold, and that is a reflection of how nascent this is as an asset. It takes a lot less to move the price of Bitcoin at the moment, whereas it takes trillions of dollars in order to make gold's price move. But that to me feels less arbitrary, this like flip to when interest rates normalize with the 2 and 10-year being positive again, which is what you'd expect under a normal sort of economic system where a 10-year debt tenure would have a higher interest rate to reflect the longer holding period of someone having to own that debt. And so this, to me, feels like a more fair comparison. The other thing that we've got to consider is that we have entered the end of the traditional bull cycle. So here is the macro chart of Bitcoin. This is Bitcoin's price over time, and we can see that traditionally what we would expect is the end of the bull run to occur now. It's typically about 1,060 days from the cycle low around here, and we have ticked over into that range now, and there would be some indication of bearish activity moving forward. However, there are some good theories to suggest that Bitcoin's cycle could be longer this time. Two of them are Raoul Pal's sort of alignment with the ISM, which suggests maybe a 5.5-year cycle. And then there's also some interesting ideas that Invest Answers have discussed on his most recent YouTube video, which suggests that maybe it's a 4.5-year cycle. To me, I don't know, but to me this is a little bit bearish, and the longest cycle is certainly plausible, but is not as well precedented as the previous two cycles, being almost within sort of 10 days of each other if we go back in time. The other thing to keep in mind is gold is leaving its fair value channel. Now, we know of gold's price here on the top right as sort of just straight up going vertical into the $4,000 an ounce range. But when we adjust gold's price for money supply, for US M2 money supply, we get a chart like this. So this is gold's price adjusted for M2 between 1960 and present. And what we can see is for this time, we have sit pretty comfortably within this channel. And the only times where we've left this is that 1980s gold bubble, which is sort of that result of that de-pegging. So obviously in 1971, we had the Bretton Woods system, the USD and gold were pegged. And then what we had was a sudden de-pegging, and that culminated in this bubble in the 1980s and the early 80s that then popped, and gold has sort of sat in this valuation channel. It peaked out in 2012, and then it's come back down, and now it's peaking back out. And so gold is at that sort of higher range of what I would consider its fair value, and it could still certainly go higher, but as we leave this range, I'd be looking out for more activity that looked a bit like this, a bit of bubbly kind of price activity in gold's price, which, considering the debasement trade, could certainly be plausible. Maybe we could break out and we could sit in this above this channel longer term. I don't know, but gold is certainly on the higher end of its traditional valuation range. So long term, I think that the traits of money will be the primary factors that drive the valuation of gold and Bitcoin, and obviously versus fiat currency. Fiat currency is dog shit, but gold and Bitcoin will continue to perform well, with Bitcoin being that digital gold narrative, and in some ways, in my opinion, being superior in most attributes. Obviously, it just doesn't have that track record. It doesn't have 5,000 years of being money, but its supply is more scarce. It is more portable. It is more divisible. It is more durable in a lot of senses, but it does struggle with that lack of track record, and in some ways, the fungibility I wouldn't necessarily characterize as perfect, right? That's very transparent ledger, and if something gets associated with like the wrong activity, maybe a sovereign might say, I'm not going to accept those coins. So that is yet to be seen, in my opinion, that fungibility of Bitcoin, depending on how hardcore some of these nations go. Over the long run, I think they won't really care. I think they'll just have to accept that Bitcoin is Bitcoin. But there may be some temporary and medium-term fungibility issues as sovereigns go, oh, I don't know if I think it might be associated with naughty things, but I think they're going to have to move on from that over time. So long run, Bitcoin's going to do well. I still think gold's going to do well. It just doesn't have that same scarcity. Gold has a growth rate of around 1.3% per annum growth rate, whereas obviously Bitcoin at the moment I think is a 0.6, 0.7% growth rate, which will tend towards zero over the next century. So exciting times ahead for both gold and Bitcoin. I think the debasement trade is going to fare well for the both of them, but I have got far more of my portfolio allocated to Bitcoin than I do have gold, but I do have some gold. And of course, nothing that I discuss is financial advice or any advice of any kind. You must do your own research. Any investment or trading decisions you make are your own. This is entertainment only, and you are listening to a random Mangosteen on the internet. I hope you've enjoyed this episode discussing gold versus Bitcoin. If you're interested in understanding a bit more about Mangosteen and Finance Borough University, you can follow me on X, Mangosteen TRD, and YouTube, Mangosteen BTC. And of course, I've got my own website, Mangosteen Global, where you can find out about some of the products that I do offer as well, which will help you trade Bitcoin or trade MicroStrategy, and I am looking to develop a gold trading product as well. Like, comment, and subscribe, and engage with my content. Flick me an email at info@mangosteen.global as well if you want to have a chat. Thanks, guys.